The market never moves randomly, and today, we're gonna prove it. Rocky here, welcome back traders, continuing from the previous section. If we assume the same previous uptrend and the same entry signal, then which variant will be stronger? We haven't even considered the case where the previous force and trend as well as the entry signal are different, showing different strengths of the buyers. From that, applying both the bull and bear rules and reading and understanding candles, we will see not only the strength of the resistance zones, but also the strength of the trend, as well as the strength of the entry signal. The factors combined together then decide whether to enter an order or not. The ultimate goal is still to consider the factors to see whether the buyer's force is more clearly dominant than the seller's force or not in the case of buying. And in the case of selling, it's the opposite. I will give an example of another case like this. We have variant 1 and variant 2 as follows. As we said earlier, if considering the resistance zones where the price creates a signal, in variant 2 it will be stronger than variant 1. However, in this case, in variant 1, it has an additional factor, which is the trend. The previous force is a clear upward force. But in the second variant, it is only a short-term upward force in the previous long-term downward force, for example. Moreover, the signal in this variant 2 is also weaker than the signal in variant 1. So even though variant 1 is not as strong as variant 2 when considering the resistance zone, if considering an overall picture, variant 1 has the support of a clear upward force and a good entry signal, while in variant 2, the force and trend are not supportive, as well as the signal is not clear. Therefore, to consider entering an order, it would be better in the case of variant 1. Okay, now we will go through specific examples so you can easily visualize and apply them. This is the gold chart on the 1-hour frame. And as in the picture, we can see that previously, gold had a clear uptrend, then the price created a sideways phase, and we can see the peaks getting lower, bottoms also getting lower, but up to this point, the bottoms are getting higher. This area compresses, then the price bounces up, breaking through the previous peak zone. Continuing after that, the price is pulling back. Thus here, we have a resistance zone according to the pullback method, which is the starting resistance zone of this wave and the peak zone that it broke. We can see here the price dropped and reached the peak zone that the buying force took from the selling force. It had a sign of the price bouncing up. However, due to the strong downward force, right after that we see a bearish engulfing candle pair going down. At this time, the signal is not good yet, so I decided not to enter an order and observe further the price movement. Here we can see that from this stage the price went down again, still returning to this peak zone. Then the price again created a bullish engulfing candle pair going up. However, this bottom is lower than the previous bottom. If these two bottoms are equal, then at the time of the engulfing candle at bottom 2, we can consider entering an order. But this bottom is lower than the previous bottom, so it shows the selling force is getting stronger. So if we enter an order here, then like in this segment, we would have hit stop loss already. We can continue to observe the price after that. The price returned to this zone, pushed up, and went down again to this zone, pushing up further, creating an upward structure. Continuing, the price went down again and pushed up, still an upward structure, and especially it broke through the previous buyer's resistance zone. Thus here the price started to show the signal that the buyers entered to attack the market through the upward structures. We can pay close attention to this bottom. It returned exactly to the bottom zone of the candle body that increased strongly before, then it bounced back up. Because the upward force here is very strong, the buying volume in this zone is a lot. When the price returned to this zone, the buyers pushed it up strongly. We have a resistance zone here. The price broke through this resistance zone. However, this breaking force is quite strong, so we can place a buy limit order back at this resistance zone. Stop loss down here. The purpose of us entering a buy limit order is that if we enter right at this breaking point, our stop loss is quite far, and it reduces the RR ratio. Therefore, in cases of strong breaking, I usually place a buy limit order in the zone it just broke. Like at this time, for the big picture, we apply the pullback scenario, but for the small picture, we apply the breakout scenario, price breaking out. At this time, we can see that the price pulled back again. Then the buyers held firm at this zone and pushed the price up. Right in this pullback stage, we have a pullback scenario again. This upward structure broke up. The price pulled back to the resistance zone, which is the root of this wave. Like here is this zone. I will delete this picture so we can see it easier. Continuing, we see the two sides struggling, the selling side and buying side struggling against each other at this zone, and then there is a sign of the buyers breaking up, showing the buyers won. The selling force from here is because it originated from this resistance zone, and the buying force from here is because the buyer's force originated from this zone, pushing the price up. Thus, it creates the struggle zone, and it shows the buyers won through this breaking up stage. There, we see when it breaks up, then it pulls back. It also pulled back to the zone that was just broken and bounced up. When we enter the 1-5-minute frame, the smaller frame, we will see that picture more clearly. Here is this upward structure. The price broke up, pulled back to this zone, struggled and continued to break up, pulled back to the zone it just broke, then the price pushed up further. Besides, after that, we can see it all follows that structure. Here is the pullback zone here. The price bounced up. Then we can enter an order at this engulfing candle pair. This resistance zone is okay. The structure is okay. The entry point is relative, not too beautiful, not too bad. Or this zone. We see the price breaking through the previous peak zone. And it shows many times the sellers pushed down unsuccessfully, then broke up past this peak zone. Then we can enter an order at this candle. In this case, we have a beautiful upward force. The resistance zone is invariant 1, which is the price pulling back to the peak zone that was just broken. This zone is not as beautiful as the zone which is the root of the upward wave. For example, like these zones or these zones. However, to compensate, it has a quite beautiful signal, a breakout style signal. Then we can enter an order here. We can even observe the smaller picture to see how it developed in this case. There, when looking at the smaller picture, we see it even more clearly. The price broke up to this zone. At this zone, the price tried to break up many times, then broke successfully, and the price pulled back to this zone, continued to create a sideways phase, then broke up. Then, like in this case, although it is variant 1, it has a beautiful upward force and structure, a beautiful entry point. And also, as I said in the breakout lesson, although this zone is the peak zone that the price broke through, it is a multi-peak zone. So it will also be stronger than the zone where the price only broke through one peak. For example, we see here, at this zone is a multi-peak zone. Usually when the price pulls back, it will have a higher probability to rise compared to the zone breaking through only one peak here. In this example, we see many cases combining both pullback method and breakout method, from the 5-minute frame to the 1-5-minute frame here, and also the 1-5-hour frame. Very many beautiful cases that we can apply to enter orders. You need to understand that not 100% of cases will produce such results. But it is just that when we analyze and enter an order according to a plan we have set previously, we will have a higher winning percentage, so that in the long run, we will still be profitable. Okay? I hope you will gain some experience from this video. Goodbye, and see you in the next videos.